after China caught a key lending benchmark to support a slowing economy, but a gauge of global equities remains set for its longest weekly losing streak on the record. That means investors worry about sluggish growth. MSCI's broadest index of Asian Pacific shares outside Japan quickly built on early gains after the cut and was last up more than 1.8%. European equities were set to follow Asia's lead, with pan-region Eurostock 50 features all up more than 1%. Chinese blue chips rose 1.8%, boosted by foreign buying. Hong Kong Hang Seng jumped more than 2%. Australian shares rose 1.1%. In Tokyo, the Nikkei stock index gained 1.3%. The gains in Asia came after a late rally on Wall Street petered out, leaving the Dow Jones Industrial Average down 0.75%, the S&P 500 at 0.58% lower, and Nasdaq Composite of 0.26%. Well, Canada on Thursday made known its plans to ban the use of China's Huawei Technology Co. Limited and ZTE Co. 5G gear to protect national security, joining the rest of the so-called Five Eyes intelligence sharing network. According to Industry Minister Francois Philippe Champagne, providers who already have this equipment installed will be required to cease its use and remove it under the plans we're announcing today. He added that companies will be required to remove their 5G gears by June 2024 and would not be reimbursed. Companies using their 4G equipment must be removed by the end of 2027. The decision, widely expected, has been delayed amid diplomatic tensions and with China. The rest of the Five Eyes network, which consists of Canada, the United States, Britain, Australia, and New Zealand, has already banned the equipment. Zurich Insurance has agreed to sell its Russian business to members of the local team in its latest announcement today, as the Swiss insurer became the latest company to announce its exit from Russian market. A slew of companies from McDonald's and Dutch brewer AB InBev to car maker Renault and French lender Société Générale have quit the market in response to Russian invasion of Ukraine, with some of handling these businesses over to local partners. However, finding suitable solutions has been a challenge, with some businesses arguing that they are maintaining their Russian businesses in order to keep assets outside the hand of the regime. Zurich Insurance says the sale, which remains subject to regulatory approval, would handed its rebranded Russian business over to 11 members of the unit team. Now, the Swiss insurance company, which conducts property and casualty insurance in Russian primarily for international customers, says it held about 0.3% of Russian non-life insurance market. China's crude oil imports from top supplier Saudi Arabia swelled 38% in April from a year earlier, hitting the highest monthly volume since May 2020. According to Chinese customs data, Saudi shipment amounted to 8.93 million tons last month, equivalent to 2.17 million barrels per day, according to data from Chinese General Administration of Customs. The hefty purchases, with trades completed mostly in Friday, are compared with 1.61 million barrels in March and 1.57 million barrels a year earlier. Imports from second largest supplier Russia rose a more modest 4% last month from a year earlier, with cargoes booked before Western governments toughened sanctions over Russia's invasion of Ukraine in late February. Russian oil arrives in April totaled 6.55 million tons. Today's data showed zero imports in April from Iran. However, customs next month is likely to report for May the report of nearly 2 million barrels of Iranian oil that will be discharged this week into a reserve base in South China. And oil prices in the international market fell today as investors worry that weakened global economic growth and tighter central bank monetary policies will curb a recovery in fuel demand. U.S. West Texas Intermediate crude recorded a price dip of 0.50% to sell at $111.70 per barrel. Brent crude sells at $111.80, recording a downward price margin of 0.19%. Bonnie Light's performances are, however, back in the green territory, recording a price surge of 0.46%, selling at $114.10 per barrel. For the OPEC basket, crude oil dealers offer $114.90 with a price decline of 1.93%.